the emerging market issues, and we also have a very difficult situation to analyze and analyze how widely the crypto asset has been adopted. But we found several several information about the adoption of the crypto asset in emerging market, and it seems like those survey results are suggesting that some of the emerging market countries such as Nigeria, Vietnam, Turkey, those countries are often ranked as the highest adaptation of the crypto asset. And beyond the survey, there's no reliable way to estimate the stock or flow of crypto asset based on the country residency. A commonly used proxy is the residency estimate based on internet visit to the website of crypto exchanges. And that data confirm the survey result to show that popularity of the several global crypto exchange among EMDE users such as Turkey, Brazil, Argentina, Russians, China, etc. So it seems like EMDE countries users have adopted quite significantly the crypto asset. And another chart I'd like to show is the size of the trading volume of the crypto exchange that operate only in specific countries. So we found 10 emerging market and developing countries data, and we analyze how significant the volume, local trading volumes compared with their local financial market. And among a sample of such exchange in emerging market and the developing countries, reported trade volume in 2021 rose quite sharply, and in some cases, volume have been comparable to the activity of the local stock exchange. So the increased demand for the crypto asset could facilitate the capital outflow that affect the FX market. Crypto exchange actually played the critical role of facilitating the conversion of the local currency to crypto asset. For market to clear, market maker must provide liquidity by trading more liquid pairs such as USD Bitcoin and USD local currency to determine the price of the less liquid pair such as local currency to Bitcoin. This type of triangular is usually facilitated by the institutional participants that have access to large pool of liquidity. So when the domestic demand for crypto rise substantially, those institutional participants can act as a gateway for conversion of crypto asset demand to capital outflows through exchange rate market. So the right chart showing that actually the trading volume of crypto is all becoming comparable to the interbank FX volumes, such as in Nigeria or Turkey. And the recent sharp rise in trading volume may have been the source of spillover in exchange rate market. So I think this is the final slide. I will defer those things into the Q&A session. But the one thing that I emphasize to the emerging market regulator is that even though we don't have a robust global standard for crypto asset, there are many existing global standards which could be applicable to some part of the crypto asset. For example, security regulation. There are global standards such as IOSCO principles, and we know that many emerging market authorities haven't implemented many of the principles. And by just implementing those of the recommendation and the principle may help them to prepare for the new challenges coming from the crypto asset. So I will stop here Thank you very much for your attention, and I'm looking for the active questionnaire and question and answer session. Thank you.
Thanks a lot, Nobu. Fascinating, interesting to see. Of course, you could say frightening as well. I mean, depends on how you look at it. Interesting to see certainly your statistics and the data you found. Yulapa, shall we move to you right away, or would you prefer that I start with Almudena because you joined a bit later? And because to have a discussion about the regulatory approach in the United States, how you see it from the Philadelphia Fed?
Yes, hi. I can wait till later. I have a generator running right next to me right now. It should go off in just about 10 minutes.
Okay, but then I will ask probably Almudena that she jumps in for the moment, and then we turn to you, Yulapa. So Almudena, as I said, let's say Almudena is running her own network on blockchain intelligence, but before was working for the Bank of Spain, and before that as well in Fortis Bank in Belgium and in Spain, and before she worked with us, as I said. So she knows the financial industry, she knows the supervisory context, and she's now helping all those which want to understand DLT.
Thank you very much. Thank you very much. It's very, very nice to be back home at TEPS and ECMI. Thanks for the invitation. Yeah, I think now it's December. So December is a good month to look back into the year and see how things have evolved, both in the market and also at regulatory level. And I think this year for crypto assets was amazing, was a huge change in the way crypto assets are used, in the way they expanded, and also in the way they were perceived by the general public and by regulators and supervisors, and how actually regulatory action has been taken and been proactively acting in the sphere. So if I look back into the year from a European perspective, we see several developments. I think for us it's very clear that crypto has evolved into a mainstream product. The volume has increased, and we had the data from Nobuyasu. Market cap is around 3 trillion USDs. We have seen a huge increase in DeFi, which is very, very important, because I think all the regulatory action was kind of not taking DeFi enough into account, or not understanding DeFi enough. So this is going to be the next challenge, I think. And we've seen just in 1 year 200% increase in total value locked. We have seen also that, of course, market is since the beginning very volatile and also very profitable, which brings me to consumers and the risks that the arrival of consumers in a more massive way to cryptocurrencies was triggered by these very profitable margins, but also somehow ignoring the risks of the volatility that is linked to that, because they were more attracted by the raise of prices and profits. And we have seen from blockchain intelligence, where we do consultancy and we're a think and action tank, so we're very much hands-on. We see increasingly fraud towards consumers because they are simply more inclined to buy and try and test and see, and everybody's earning, so I'm the only one stupid that is not earning money with this, so let's try. And then there they find they find a space for fraud towards consumers. And then what is, I think, very, very important is the institutional arrival into crypto. So we are seeing banks and financial institutions increasingly entering the market or preparing to enter the market, and that's what we're seeing. So preparing to offer custody, exchanges, services, payments, of course, financial markets, but also investment products for wealth in the wealth management units. We also see developments in merchant banking, and also in which is also very interesting, in internal control, compliance systems, auditing, rewarding systems internally to enhance certain behaviors towards internal policies and these type of things. Of course, the phenomenon is very global. And I think what is also very important, and because it's also not enough taken into account by regulators so far, is the increase and the new trends in NFTs markets, very much linked to the metaverse, the news on developed metaverses, from different sources in different ways, decentralized by Facebook, and what this market brings, which is an incognita, but it's very promising in terms of high action and a lot of activity in NFTs. And of course, I think the evolution of stable coins and how they relate to especially retail CBDCs and the work that central banks are doing on CBDCs, which again brings to a different level of consideration, which is that everything that has to do with geopolitics, national positioning in this new world of digital business and digital money, and what it all means in terms of power worldwide and at national level. So what I see is that we have, of course, a whole new world in front of us, which brings a lot of opportunities. And here I would like to link this to real economy, because I think we're very much focused when we speak about cryptocurrencies and crypto assets and into the part that is purely investing for profit and very, very financial type of products. But I think there is also an important and relevant evolution of these tools for the real economy. And in this sense, I think it's worth mentioning, how the European institutions and the European Union is positioning itself as very much in favor of the blockchain and DLT technologies, with the development of the EBSI blockchain platform, with the developments of self-sovereign identity wallets linked to blockchain, and this type of tools, with specialized units working on blockchain for the real economy. And I think there is an important bridge of the financial products for this real economy. And we are also seeing that blockchain is used also in the financial markets for innovation. And for instance, in Spain, we have a new financial sandbox, which started the beginning of this year, and out of 18 projects which passed the first round, 9 were blockchain related or DLT related. So we see there is an important use of it for innovative products that are, like kind of in the system, if you want. But of course, there are also risks, and these risks are mainly consumer-linked, consumer protection, investors protection, financial stability, also partly geopolitics, and all these links to power and state power. So what we're seeing is, again, that there's not enough information for investors. It's very, very often not rigorous enough, not balanced, not complete. So there are gaps in investors' protection. There are signs clear of market abuse, of fraud, as I said. AML is an issue, I think not particularly important and quite early addressed. And of course, we see it's not the case right now, but from financial stability perspective, we need to follow, because we might see, what I see is that money is flowing outside the system, and we can see what we saw in 2008, silos, supervisory silos, so not seeing the overall picture and missing some points of important risks from a financial stability perspective. So where are we in terms of regulation? What we've seen is that there have been, during this year, again, now looking back to the year, regulatory action. But slowly we're seeing piecemeal approach towards introducing regulation. We have different approaches and different incentives for countries and regulators. Some small countries are trying to use regulation and in this world as a new opportunity for the country, kind of with a startup approach towards the country, and maybe El Salvador and others. So they see it as an advantage to position themselves into the global sphere in this market. Some countries are rather feeling threatened because there's a push bottom up of their citizens, mainly countries that are suffering of lack of trust by citizens or with high levels of inflation. And others, maybe like the EU and the US, see increasingly a market that needs to be addressed policy-wise and regulatory-wise, because it's growing and it's justified some regulatory work to protect the main values of these societies. But here we see again different approaches, and we will, I think, speak about it later. But the European approach towards regulation in crypto assets, it's quite different from the US approach. Even if maybe the objective is the same, no? So the challenges for regulators, I think, here are clearly, the international nature of the crypto world and basically the digital economy. It's very global, it's very diverse, it's very new, and it's growing extremely fast. And innovation in itself, in this market itself, is growing, and it's happening so fast that it's very difficult to catch up. It's highly technical, so I think the skills are missing in the regulators and supervisors offices that are more, I think, focusing on legal experts, economists, and less technicians and coders and hackers and technical people. There's of course the decentralization element. I think the approach, at least at MiCAR and the European level, somehow it's based on old ideas and old, if you want, registers. The whole idea of decentralization is being an issue. I think just yesterday or this week, the Bank of International Settlement was addressing DeFi and how the governance in DeFi, how decentralized or centralized it is, and how this should reflect in regulation. But I think this is an issue. Maybe the categories of issuer, product provider, service provider is not the right approach in this crypto world, because eventually you cannot identify these roles, or you cannot bring that down to specific companies or people. So there is a big, I think, challenge there. And of course, there is a challenge in everything that has to do with cryptography, anonymity, pseudo-anonymity, which is again highly technical. So again, I think the knowledge is missing, and the geopolitical effects are also to be taken into account and are playing a greater role than in other markets or in other times. Where we had to face new regulation, new issues or new market developments. I think the impact of crypto in geopolitics is absolutely essential. It has to do with the digitalization of the economy, the Internet of Things that blockchain and DLT brings with it, that goes far beyond, the crypto market, I think. So designing, and I'm finalizing now, but designing a coherent global and innovation and an innovation-friendly regulation and policy framework is actually very challenging, because I insist technology, legislative process is very reactive, and I think we should turn it around into more proactive and more, or at least more aligned with the market. There is a lack of comprehensive regulatory framework for a global financial system, and there is decentralization issue. So I think these are the main elements that makes challenge very, very big. And basically the potential regulatory and policy gaps and inconsistencies are coming from this tension between innovation and existing laws and regulation. And in this case, this is stronger than in other cases, because the innovation is very, very different. It's not like an evolution. Is very, very much revolutionary. There are overlapping legislations, and also there's an overlap of the regulatory agencies that deal with the thing. So there's very partial approach of the challenges, and we are creating inconsistencies and eventually not seeing some risks, which also happened in the 2008 crisis, I have to remember. There is, I think, not enough global coordination, and in that sense, I think what we should do or think about is, how to improve interagency and international coordination. Maybe go into a risk based approach, because otherwise it's very, very difficult to, at least from a European perspective, where we regulate, so we define categories, and maybe we develop new categories in between, and it's really not fast enough. The regulatory processes are really not fast enough. We need to develop an approach towards decentralization, in particular in view of DeFi and the DeFi evolution. And for sure, and I think this might be the most important thing, we need to work on skills for regulators, for supervisors, for the oversight agencies, and also for consumers and investors that are now, I think, not at all prepared to face the risks of this new market, but are very much keen to enter it. And there we need to develop a set of awareness, action, and knowledge altogether. So that would be my view from the European perspective so far on market and regulation.
Okay, thank you, Almudena. That was a European and a global view. Yulapa, how do you see it from the United States perspective? This problem which we see of the SEC trying to apply the securities markets approach, but then others like in Europe saying, look, this is not a securities market. Some bits and pieces may be financial instruments, but overall they are digital assets, as Europe is doing. Yulapa, thanks for joining us from the Philadelphia Fed.
Hi, good morning. Good morning here. I apologize for joining late. I thought it was supposed to be 10 a.m. Eastern. So I'm Julapa Jaktiani. I'm Senior Economic Advisor at the Federal Reserve Bank of Philadelphia. And I have to remind all of you that everything I say today is my own view and not the views of the Federal Reserve Bank of Philadelphia or the Federal Reserve System. So thank you very much for having me join this panel, and sorry to miss some of the very interesting presentation, a lot of good, beautiful pictures. I don't have slides, but I agree with the two speakers previously that particularly the part that talk about we need more technologies to be involved in this regulatory process, particularly with these cryptocurrencies, stable coins, NFT. It is not easy. It is totally brand new, and we have not fully understood the products, and the new things keep changing. Technologies also keep changing. Also, I agree that it is very important that regulators cooperate, coordinate across jurisdictions, because activities we have seen moved cross-border, right? Like Bitcoin, when it was banned in China, what happened? It moved to the US and other parts of the world, still operated by the same owners. So things move around, and so we have to coordinate our activities. But before going deep into these regulations, I also wanted to mention the basic questions and how we think about this, regulating these new products, new activities. Do we actually need cryptocurrencies? What does it do for us? Who benefits the most, right? And clearly, our current payment system is antiquated. It was designed years ago when there was no technology that we have now. And so it needs to be modernized. And so now everyone expects, particularly the millennials and the younger people, expects payments to be faster, real time if possible, better and cheaper. Why do we have to pay? Like if I have to give my mother a birthday present in Thailand, it would take a few days. And also I have to pay a big fee. So that doesn't have to happen with this technology. It has to be real time and no cost, right? It should be free. So the cryptocurrencies has a potential to resolve that friction in the current payment system. And on top of that, financial inclusion is another hope through these cryptocurrencies, because we know that 1.7 billion people around the globe are unbanked and have no access to the financial system. And statistics shows that 2/3 of these people actually have a mobile phone, a cell phone. So they could potentially use their phone to make payments and be included in the financial systems. And that's what we have seen clearly evidence in India, in Kenya, and China. So we are hoping that in the US as well, there are 26 million Americans who don't have a bank account or thin file, have no access to credit. So cryptocurrencies could solve that problem, potentially. Now, in terms of the market, you have seen from the beautiful plots that there are many different cryptocurrencies other than the most famous Bitcoin that we have people usually refer to. The market has, well, there are thousands of cryptocurrencies. If you haven't been following, we had around the globe about 3,000 cryptocurrencies in 2019. It went up to 4,000 in 2020, but it totally boomed during the pandemic. A lot of tokens are being created just about almost every day. So right now, just as of November last month, there were 13,500 different cryptocurrencies. And a lot of these are tokens that are created by private firms. And so with these, the different currencies, many of them actually don't last very long. Thousands of them have failed. And so it's very volatile. We can just see from the most important one, Bitcoin, which takes about 40% of the entire market share of cryptocurrencies at this point. The value was like about $1 in 2011, for example. It went up to 15,000 in 2017, 62,000 in 2020. Well, it was down to 3,000 2 years before, and now it is at 49,000. So you can see how volatile that is. And a lot of people, some people actually got rich through it, but many people also lost all of their saving and invested money and basically lost their church, right? So, and many don't really understand, particularly the retail investors. Also, how are there have been studies that look at, okay, so it's very volatile. What can we do with that? Is it related to stock market performance somehow? And it's not. So, so we cannot particularly, it's not made to as a hedging instrument if you want to use it to hedge against other markets, stock markets. But because of this volatility, a lot of some of the family offices usually recommend that their clients invest a really tiny portion of their portfolio, could be 1% or even less, or 2%, and in these cryptocurrencies, and potentially could, sometime it could earn 3,000%, or it could they could lose their investment 1%, which is fine for many people. So with all these and who invest in these cryptocurrencies? They used to be mostly hedge funds, and with this during the lockdown, a lot of retail investors, small investors who don't really understand fully what's going on, they invest in everything using Robinhood or whatever app that they can access a small amount, but need a lot more education around these cryptocurrencies. Now, we heard about stablecoin, which was created to deal with this volatility. And so the value of stablecoin is tied to fiat currencies mostly, but also could be other assets, particularly US dollar is popular for that. Tether is one example. Stablecoin plays a big role. So there have been some President Working Group has recently issued, 2 weeks ago, issued a stablecoin report in the US. Basically thinking about whether only banking institutions should be allowed to originate stable coins. Of course, yes, that would be a safe way of doing it. One way of doing it, there are some practitioners who suggest that, well, maybe regulators don't really know how to regulate technologies. And so they know how to regulate banks, and everything are being put under the banking umbrella. But also, I think another reason is that a lot of these tokens and cryptocurrencies that are being created by private firms that are not regulated, they have to get their funding, they have their white papers that describe everything that they do and in the detail. But nobody really know and go examine to make sure that the documents is accurate, and also they follow the same process. Like unlike banking institutions, we go in there and examine everything and making sure that their documents is accurate and they follow the process. So I think that's one reason why maybe being in a bank would be, we will be sure that the reserve that they are supposed to be holding to support the value of stablecoin would be quality assets, and will be the right amount of reserve that being held, and we know that it's there. So I would also, so some other concerns they're looking through. So there are also questions about, so we are creating these cryptocurrencies, and it is private. Now we're seeing that China now actually introduced crypto CBDC, and many countries in Europe, some countries in Europe also have explored and actually experimenting CBDC. So the same central bank around the globe, including the US, is exploring. So in the US, Boston Fed is partnering with MIT to explore the various technologies, what the technology to do in terms of, because the impact of CBDC, we can talk about it, but it really depends on the detailed design and implementation design of CBDC, how it would impact the monetary policy, financial stability, and all these other factors, right, that we are concerned about. So the CBDC could be account-based or token-based, or it could be whether it would earn interest, would it earn negative interest, and would it are we doing this to replace cash completely, or is it to supplement cash usage? Many people, older generation particularly, are attached to cash. So some people believe that our grandchildren or great-grandchildren may not even know what cash means, right? Because we're going to become a cashless economy. So I think the design, thinking about understanding the technology and what it allows us to do is very important. And particularly now that quantum computing is coming. So that may also need to be taken into account in designing how we implement central bank digital currencies. Other things that we are concerned about.
Could you conclude? Because otherwise we won't get there, or probably finish with some final comments.
Yes, so final comments, I would just wrap up to say that there are many different regulators in the US that take care of this. You mentioned the SEC. Gary Gensler, the new chair of the SEC, was testifying in the Congress, and he was asked about, can you come up with the list, the check-off list to identify which crypto is commodity and which is security, and it is not easy to do that. Because a lot of detail, a lot of some are investment contract that is clearly investment securities, but some are not, but still actually should be securities. So the SEC is one. If it is security, SEC regulating it. If it is commodity, then the CFTC, which regulate commodity futures trading, would regulate that. Also, if stablecoin is being issued by banking institutions, of course, bank regulators, the FDIC, the OCC, the Fed would be supervising, regulating that. But also there are a lot of third-party vendors that work with banking institutions that we also explore and examine. We have FinCEN, and also some crypto asset acts that were issued in 2020, and some more studies are being done by the President Working Group, and also the Federal Reserve is coming out with a report soon. So that's for now. Thank you.
Thanks a lot, Yulapa. Very interesting, but also you addressed it very well. Let's say how confusing or how difficult it is to classify what is what in the domain of stablecoin for regulators to have a certain view, but also for consumers or investors to know what we are speaking of. We have Tina, who's an operator, or who was an operator, who's now running the digital chambers, who can react on that because she knows the world and she's worked in that. So happy to see that. I see we're already, 10 minutes to 4, but we can go a bit over time, no problem. Let's see, we can take questions and afterwards. Tina.
Thank you very much, and thanks so much for inviting us to join you today. I'll keep my comments brief. My colleagues on the panel have done an exceptional job of, distilling the market today, and I don't want to repeat what anybody has covered already. I will just say that we're at a real pivotal moment in digital asset adoption. We've already heard how trading volumes are growing across all areas of the world. Additionally, market cap growth is being fueled by institutional money, which we haven't gotten into too deeply today. There's been a huge surge in DeFi platforms, products, and services, which is driving interest, as well as the incredible interest in NFTs this year. So it's been a pretty incredible year in the crypto asset markets. But as we've been discussing, all this growth has of course raised attention of policymakers, and we're at a very critical crossroads, which absolutely does require greater regulatory clarity for the industry to continue to grow and to enable the promise of crypto to be realized through innovative use cases which solve real problems, and to prevent innovation being stifled. So, we talked about proposals like MiCA, and whilst I would say from a personal perspective, perhaps MiCA isn't perfect for everyone, but it does offer market participants greater assurances when considering establishing and growing businesses that the regulatory climate is known. And MiCA also will unify regulatory frameworks across 27 member states. So that'll provide some really significant commercial advantages to companies who will be able to passport into multiple countries without having to apply for a member state by member state license. And this could be a game changer for growth in the industry, but also for Europe. And then in contrast, regulating trading platforms and oversight of crypto market integrity in other countries is still at evolutionary stages. So whilst AML-D5 brought crypto asset service providers in the UK and other EU states under AML registration regimes, regulatory oversight of the trading platforms themselves and the market integrity has still not been established, and that gap continues to cause some operator challenges. And then similarly in the US, which agency is responsible for oversight of trading platform activities is still being debated. Whilst a number of legislative proposals have been introduced, given the number of regulators in the US, I predict this issue is going to continue for some time. And as Julipa suggested, the SEC has made it clear that they believe that they should be the regulator for a number of crypto asset activities, but equally, they have yet to undertake rulemaking and provide clarity around what is or isn't a security. And this is, again, a real challenge for market participants. So in the interest of time, I think there's one other thing that I would just like to dig into a little bit more, because the regulatory scrutiny and policy discussions around stable coins is really increasing. And so, in short, stable coins have really gone from too small to care about to really too big to ignore. And on the positive side, from the industry perspective, it's prompting policymakers to consider enabling regulatory frameworks which could further mainstream stable coins. So that's a good thing. We talked a little bit about the President's Working Group, undertaking a report this last week. CPMI and IOSCO also had a consultation looking at the treatment of stablecoins. And risks that are being identified across, around the world by policymakers include, disruption of our payment systems, the potential for a concentration of economic power, and the increased use of stablecoins as a means of payment, which is a good thing, I guess, and also a concern. Other major concerns, which we talked about at the beginning, include kind of operational risks and whether stablecoins indeed hold enough liquid quality assets to back up their value in the event of a run on a stablecoin. So a number of policy options have been proposed to address this. In Europe, we are putting stablecoins into the e-money regulation. And in the U.S., there are other, policy debates around potentially, only allowing the issuance or only allowing the stablecoin arrangement of the payments to be offered through a bank-like, FDIC insured institution. But for me, this raises some questions. So if stablecoins are supposed to be fully capitalized with cash on hand, and banks have a commercial model of lending, they provide mortgages and business loans, banks won't be able to lend from their stablecoin reserves. So, it's not really commercially viable. So I think this raises some questions. And ultimately, from the Chamber's perspective, stablecoins are absolutely not securities. They're designed to maintain a stable value and indeed not increase like an investment contract. These assets enable cross-border global transactions that are used primarily for payments. If they were determined to be securities, all the payment and potential financial inclusion benefits that we've heard about would be lost. And equally, having significantly different approaches to their oversight will create even more challenges for adoption and use. So, from the stablecoin perspective, we would just like to reiterate that, we believe that stablecoin payment systems should be regulated in the same way that any other retail-focused digital payments business are regulated, according to the principle of kind of same activity, same risk, same regulation. So hopefully that provides a little bit of context and a deeper dive into kind of the key areas that we're looking at from a policy perspective, but equally the key issues that are affecting market operators today.
Thanks a lot, Tina. Very comprehensive, very clear view. One additional question to you right away, but how can a consumer know where the crypto is based, the crypto exchange is based? We've seen it from Nobu, that most of them are based in offshore financial centers. If we have MiCA, you will have to have a license in the EU. Otherwise, you will not be allowed to offer these services. But the consumer will probably not be aware whether there's a license or no. Of course, then you have to look on the website, and the supervisor will have to investigate.
Well, so I wasn't quite sure on that slide whether we were talking about the volumes or the number of exchanges. So I agree that today the majority of the volume of trading activity is likely happening on offshore exchanges. However, the amount of onshore exchanges in the US, for example, all of those exchanges are regulated if they're operating in the US. I think per, I don't want to say per capita, but the overall average, when you look at the number of exchanges, I think there are probably more regulated exchanges, or at least exchanges that are applying for regulation or want to be regulated, than there are purely offshore regulatory avoidant exchanges, right? Now, shifting that volume off of those unregulated, non-domiciled, venues, I think will happen if there are regulated options available. And that's the challenge, right? So in Europe and the US, we've had pockets of different types of regulatory regimes, mostly focused around AML. But we haven't yet had, except in cases like Malta or Gibraltar, very clear end-to-end regulatory frameworks that cover the full breadth of trading activity. And I do think that this will be a competitive differentiator for Europe. I do think that MiCA will bring that and will start, hopefully, a global trend.
Okay, thank you. Probably Noble wants to comment on that. Let's say on this question about your chart, about was this volumes or was this number?
Yeah, it's volume. It's volume. Yeah.
That's what I thought, yeah.
Yeah. So I agree with what was said. And maybe I can respond to some of the question or the comment from others. Yeah. So I think the difficulty is who is the regulator, or what kind of requirement should be appropriate for different kind of crypto and the stable coins. Probably the biggest challenge that we are facing right now is that quite quickly changing use cases. So Bitcoin was initiated for pure payment purpose, but nobody used that for payment purpose. Maybe some are using for remittance, but maybe the biggest use cases for investment, store value, for the hedging purpose of the inflations. And the stablecoin also, the use case are changing from pure store value to more the security financing transaction if we combine the stablecoin and DeFi together. So the main use case are changing quite quickly and will change quite quickly in the futures. And the appropriate regulation should be tailored to the main use case of each crypto asset and stablecoins. So if the stablecoin is using purely for the payment purpose, of course, payment regulation is the best way to approach it. And if the use case is predominantly for investment purpose, maybe securities or MMF regulation is the right way to go. And maybe if the use cases are mixed altogether of investment, payment, and lending, maybe the banking regulation is the only way to solve those mixed use cases. And we also want to have a global standard. But the biggest challenge, if the many jurisdictions adopt e-money regulation or MMF regulation, we don't have a robust international standard on that. So that may create the fragmentation of the regulation globally. So we need quite a strong international standard taking place over whatever the universal solution on that. So at this point, the only way to solve quickly the global the fragmentation is to build based on the banking regulation, because then we have a quite robust the global standard on the commercial bank regulation. But yes, of course, devil is in the detail. So that's my comment on
thanks, Nobu.
interesting discussion.
Thanks, Nobu. But the EU is a bit navigating in between this. It says it has a specific regulatory framework for crypto, but I mean, it basically puts it all together in one framework, whether it's now a payment system, whether it's now an asset, whether it's a commodity, or whether it's a non-fungible token. And of course, it adapts a bit the regulatory framework for these three different forms, but still, for my part, it remains confusing. I don't know whether Almudena has a comment on that, or Yulapa, to the extent you have followed the EU debate, because if I then follow what, for example, Yulapa said about the US approach, it's more securities approach. And you say it should be the payments or the banking approach. Almudena, you want to comment, or Yulapa, yes?
Yeah, I would again stress that not all crypto assets consider security, right? And right now, banks, I did mention earlier that banks in the US are now allowed to provide custodian for crypto assets. And so many of them actually also have creating platform for on-ramp, off-ramp, for wholesale payment, and stablecoin is playing a huge role in providing liquidity. So we are thinking about, but they're all different assets. And of course, we can try to say that, yes, it should be just one big major rules and it applies to all crypto assets, and that's not going to happen because they are all unique. And so they require different regulations, depends on how it's used.
Almudena, you want to add something to this? I don't hear you. You're on mute, Almudena.
Sorry.
Sorry, Yulapa and
no.
Almudena had to leave in the meantime because you had to join the meeting at 4. Almudena?
No, I think we need to be, grateful for having MiCA, because it's bringing, I think, a stable framework, and it's giving some clarity to the market. And I think this is also, bringing institutional organizations into the crypto world. And that's what we're seeing. I mean, since MiCA proposal is on the table, banks and financial institutions are working much more on the crypto sphere, and how they should be acting in there, and what products can they be using and offering to the clients. So I think this is bringing clarity to the market. This is bringing legal certainty, and it's very positive. But it is certainly, I think, not enough. It's, as I said, I think it's based on issuers and service providers. It's leaving aside, many of the decentralized options. and it's not covering the full spectrum. So it might be very, very quickly outdated. And that's, I think, maybe the greatest challenge and the greatest problem with MiCAR.
Okay, as I said, Tina had to leave, so she can no longer be with us to have questions. But I still had a question for Nobu on the systemic effects. I mean, does it have? I mean, like also Almudena referred to this report from the BIS, which was published today or yesterday, referring to systemic risks and DeFi, but DeFi by definition are very small. But overall, if you look at, for example, your chart on the volumes on crypto exchanges, if all of a sudden there are huge disruptions in these exchanges, could it have systemic effects? If ULAPA says, for example, they are used for liquidity providing operations, how do you look at this in the IMF?
Yeah, so we did some analysis in the recent chapter about the linkage between the stablecoins and major crypto exchange and potentially market makers. And also DeFi is behind the market makers. So we are kind of speculating the linkage between those entities and also through the hedge fund to the investment banks increasing probably in the recent years. And we are seeing quite a higher correlation between the crypto space and the traditional financial space. And I guess that we are seeing more and more in the next few years about the higher correlation between the two. So we are working on those issues probably continuously about the linkage between those main players and how especially the capital and liquidity position linked together to see that whether any domino effect among those entities could trigger the systemic event. So we are exploring those things, but the lack of data is very challenging to analyze those issues.
And I got your message from your presentation that you're calling for a global standard. So that is certainly well taken. I had a question, but I think it's already responded to. What are the main challenges for policymakers they face in designing a suitable legal and regulatory framework for crypto assets? That was, I think, what all this seminar was about. There was also a question whether your slides will be available, Nobu. I think we can circulate them, or of course we can provide also the link to the financial stability report which you published. But if there are no more comments from ULAPA or Almudena, I think we can close it here. We are about 5 minutes over time. ULAPA, you still have any addition? Final comments you want to make?
Sure, I would say that I think it's still many countries may be still trying to decide whether like China has decided to ban crypto assets and issue their own CBDC. So I think a question of what should be the roles of government. Should we allow private sector to do this, or should it be government doing this, or should be the government may be providing a supporting role as opposed to operating role, like building the train track for the private sector to provide better interface and also to keep up with technology to run the train schedule and all that, basically. So I think that's to be determined.
Thank you. Almudena, and a final comment?
I think very much that we need to invest more in skills because we are long behind the market and long behind investors, and this is what it's creating the real risk and the real challenge. So I think skills building and shifting towards technical knowledge.
Okay, I fully agree with this, because if for those who have not read the MiCA proposal, it gives an important task as well to national supervisors, just to the European Banking Authority and the European Securities Market Authority, to supervise crypto assets and crypto and stable coins in the future. So that will be a huge task. With this, I want to conclude the seminar, but also to announce that on Thursday, we have another related webinar on the subject, but on central bank digital currencies alone. We have offered a prize for the best paper on the subject, which was, by the way, funded by Facebook, by Novi. And we have awarded the prize to a very well-known German academic. Of course, we did the blind reading of the papers. It is awarded to Peter Povinger. He will present the paper on Thursday in a webinar in the afternoon, and we'll have comments on the paper from others. So it's a bit different than this webinar. There's one paper which was selected, and others will comment upon that, but it's all focused on the central bank digital currency. So not necessarily only on the crypto asset related issues. So with this, I think it was a very useful exchange of views. So thanks Nobu, Almudena, Yulapa, and also thanks to Tina. Gave all very complimentary views and will allow us to write a good summary of this debate. So thank you very much, and let's hope we can see you again. Bye-bye.
Thank you very much.
Thank you very much for your attention.
Bye.